We're so happy you're able to join us today. We're going to wait a few more moments, but in the meantime, grab your cup of coffee, get comfortable, and we'll get started soon. But while we're waiting to kick things off, I'd love to hear from everybody in the chat where you're joining us from. All right, welcome to our webinar, The Evolving World of Corporate Spending and Working Capital. My name is Rusty Hampton. I'm the Vice President of Sales here at Torpedo. If you're just joining us here, we would love to hear where you're joining from in the chat. Just know that your microphones are going to be muted, but you can always voice your thoughts in those comments. We will be monitoring those throughout the webinar. I encourage to engage in the dialogue. We're also going to be recording this, so if somebody from your team couldn't make it, or maybe you can't stay the whole time, don't worry about it. We'll be posting on social, sending it out, and if you want to rewatch it, it works that way too. So today, what we're going to be discussing is essentially economic planning for today's world with Torpedo and Plastiq. We're going to cover working capital, what it is, why it's important, options and methods for accessing that working capital, how to evaluate options, and how Torpedo and Plastiq could potentially help you unlock something to keep you afloat. So we've been working closely in partnership with Plastiq for almost 2 years now. Please join me in welcoming Plastiq's Head of Partnerships, Bruno Perreault.
Hello, everyone, and thanks for joining us. And thank you, Rusty and Torpedo, for having us partnering with you.
Absolutely excited to kick things off with you, Bruno. Just as means of introduction, so for those of you that are unfamiliar with us, Torpedo, we provide a commercial credit card program and built-in spend management platform. Our founder, Brent Jackson, was working at an accounts payable startup when he kind of recognized the need for innovation in the space and founded the company in 2019. Essentially, what we're doing is granting business owners the ability to get kind of tighter controls and instant visibility into how their employees are spending, while also eliminating a bunch of administrative work for finance and accounting teams. In the past 2+ years, we've been growing to nearly 1,500 customers today and are built to pretty much serve both enterprise businesses and mom and pops alike. Passing it to you, Bruno.
Thank you, Rusty. Again, thank you everyone for taking the time to to listen to what we want to share with you today. So Plastiq is about 10 years old and was founded by two undergrads who wanted to be able to use their credit card at the time to be able to pay for rent, tuition, and utilities. That was sort of the start of the company, as in, hey, we want to use our card to pay for things that where cards are not accepted. The company has grown significantly since and has really sort of migrated to the business market. And at the core of what we do is we enable businesses to choose how they want to pay. So if you want to use your credit card to pay a vendor that doesn't accept cards, you can do that through Plastiq for a fee. So that really essentially gives you the ability to use your card, your Torpedo card, for example, for more of your expenses. And the reason businesses use us for that is because they want to take advantage of the card credit and card working capital, which is a part of the theme today. They want to get more rewards potentially, but they also want to consolidate their expense on their card program. There's a few customers below. These are larger names that you may recognize, but these businesses have been using us in some cases for years to pay for things like inventory, from vendors that don't accept cards, to pay for marketing and advertising. They may pay an agency, they may pay directly a Facebook or Google for large advertising spend, or they may use us for freight and other types of services or products they have to buy. Again, with the theme of the vendor they buy from doesn't accept credit cards, and they want to tap into their Torpedo card, for example, to get more out of the card program. Over to you, Rusty. Yeah.
All right. Well, so to kick things off, before we get into the real juicy stuff here, just kind of wanted to go over some basics. I know we've got people joining us from all different types of roles, different types of businesses, different parts of the world. And so really just want to talk about what working capital is, what it is, why it's important. Really at its core, for finance teams to really measure the financial health of their business, AKA just really getting an understanding of the company's ability to survive a crisis or, a significant downturn in business. There's really just two key metrics that they're really looking to understand, which are cash flow and working capital. So cash flow is pretty simple. It's really just how much money is passing through the business, what they're generating, what they're consuming within a certain time period. Working capital is really just the difference between those two things. Subtract the liabilities from the assets. It's essentially, the surplus or shortage of money that's going to help them meet their kind of short-term obligations. And so if you think about it, more working capital equals greater ability to kind of get through those financial challenges that you might be facing. Also gives you a lot more flexibility to invest in yourselves for growth. So if you look at the graphics here, so according to a survey on small businesses done by JP Morgan, half of small businesses today in the US have less than 27 days worth of working capital in hand. Bruno, what are your thoughts on how businesses are, handling operating on such a tight cash cushion, and what are they doing about this, limited time frame that they have?
So the and looking at that data and looking at the surveys, I was not surprised, but definitely a little bit shocked at how few days of cash on hand or working capital these businesses have and how they operate. And if you operate in a consistent manner, and that could be enough for you, 27 days may be actually good. But given sort of changes in fluctuation of business, that can be really tight. And if you, as a business, you miss a sale, or your sales are slower, or your receivables are slower, you may have a cash crunch. So that's why businesses have been looking for new forms of working capital, but also that I think more than ever now is probably very important for businesses to have some ideas of how they're going to get through any type of business slowdown or cash crunch that may or may not come. Yeah.
Great. And so, Bruno, for the uninitiated, what are some of the most common ways that you're seeing businesses and business owners kind of bridge this gap and get some of that additional cash on hand?
So what our customers tell us they do, and they sort of look at internal options, and for your business, it may mean maybe delaying making payments. Maybe you have vendors that can offer you extended payment terms at no fee or very low fee. You may postpone expense, or you may use a card program where you can actually use your card, pay today, but that card statement is not due for another 25, 30, 40 days. So there are ways to reduce your cash, the timing of your cash outflow. There's also many ways to, they tell us to increase their sort of get paid faster, offer early pay discounts. We hear that from some of our customers where they may be able to get paid quite a bit faster by offering a small discount. Some of them resort to invoicing their customers sooner, and in some cases, some of them come to us and say, "Hey, I don't take credit cards today. I don't want to deal with the fee security. I don't want a lot of my customers to use it. But can you help us with that?" And we have a way to do that where we can enable them to take a card or offer a card option to their customers. But these are all internal options that, by and large, most businesses have, particularly if you deal in a business-to-business environment. Right? The interesting thing for us is that when it comes to internal, people have solutions in place. Maybe you can do a little more with what you have, but there are many external solutions out there to get more working capital. The more traditional ones, the bank line of credit, traditional commercial card. There's more established supply chain finance providers, inventory financing, those kinds of things. And by the way, getting a bank line of credit is obviously one of the better tools in terms of having access to capital from your bank. The cost benefit is always very attractive. A little bit more difficult to get, but it's definitely something that any business should be looking to have, right? And I remember my accounting classes way back when is get that lined up as something to have, and if you need it, try to get more than you need. On the other hand, the market has been very vibrant, and there's a number of alternative solutions today. Many of you are familiar with the alternative lenders, the Cabbage, the On Deck, and others that the Blue Vine, as well as the new commercial card like Torpedo, Brex, as well as other sort of more technology-based ways to get funding from third parties or from vendors. So there's a lot out there, but there's a lot of options. Our customers typically come to us and they have some of these options in place and they're looking to supplement that.
Makes sense. And so, tying back to some of the more traditional methods, for anybody in the audience that's been paying attention to the news, you're probably aware that, rate hikes have been taking place since the beginning of the year coming from the Fed. And while they're not necessarily directly deciding what the prime rate is, it's modeled directly after, what they're setting. And so, it's highly correlated. How are some of these kind of recent changes in the market that are likely going to continue impacting people's businesses and their access to this kind of traditional method of working capital?
The price is going up, but the cost of credit is going up, across all industries, business or consumer, regardless of the business you're in. Interesting, I believe the rate went up by 75 basis points today, was just announced. So the funding rate went up, the prime rate is going up. It's tied to that. So that increase in rate continues. By and large, it's been anticipated by the market and the lenders. But what the impact is it's more expensive to borrow money. The prime rate has pretty much doubled almost since the beginning of the year, or will be double by the end of the year. Lenders tend to be tended to be a little bit more selective, a little harder to get credit. The amount of credit one gets maybe a little bit lower than before, and we hear that from our customers. So I think the importance of looking at all the tools in your toolbox to get the working capital you need, now is a good time to do that.
Absolutely, and not just impacting businesses, but consumers alike. You look at anybody that was trying to purchase a home at the beginning of this year, might be priced out with where monthly payments are based on the increase on those interest rates. But luckily enough for businesses, we live in 2022. Lenders, tech companies alike have been trying to innovate on methods for obtaining some of this extra cash for growth. How is the market impacting some of those alternative options that you kind of mentioned at the beginning of the show here? Oh, I think we lost Bruno. Oh, there he is. Sorry.
I was looking at the chat and I hit the wrong button, obviously.
No worries. I was just talking about, we mentioned a few of those alternative options that are out there at the top of the show here. Curious, how are some of these market conditions that we just talked about impacting some of those, modern lenders and tech companies alike that are trying to help people solve the same problem?
Yeah. Well, as you said, there's a lot of options out there. I think if you go to the next slide, right, there's still a lot of options available out there in the market today. And if you look at the names, some of the names on that chart, some of them are relatively new. There may have been more names a year ago than today, right? So the companies sort of go in different direction, but there are many alternatives still today for small business, be it a short-term loan line of credit. Merchant cash advance, particularly if you are in the e-commerce, particularly direct-to-consumer e-commerce business, working with a Shopify or Amazon, you can get access to your sales ahead of time. Those kinds of, that's interesting. Receivable financing. Pipe is one company that provides you credit based on your future SaaS revenue. So if you are have business customers that have subscriptions with you for a long period of time, you can actually get money up front for that. So, and then you have what we call the next gen commercial card, the Torpedo, the Divi, Brex, that offer card solution, often with expense management solution, often with additional sort of benefits. And there's other early pay, dynamic discounting company, combination of technology company and capital providers. But the net is there's multiple solutions. One thing I think we didn't cover at the beginning is thinking of working capital. We're talking about 27 days of cash, in cash balance on average. No, you also have to think about what we've been calling your cash conversion cycle, right? Do you need credit for 30 more days? Is that going to do it for you? Or do you need credit for 70 days because of the way your purchase and your sales are synchronized? Or do you need credit for 6 months, right? So all these providers provide different terms. You typically are not going to get 90-day credit on a card, on the typical card. But you can get 90 days or 120 days or even longer with many of these solutions, or even longer with the bank, right? So now part of the looking at alternative is also coming in with I need 90 days. So I need 30 days, but I need to do it every month, right? I want something that gives you the ability to sort of replenish that every 30 days.
Yeah, so I mean, there's a lot of different options out there, and it's all about what kind of fits your business model, what is going to be a solution to your problem, really just what fits your needs. And so at this point, we're gonna actually turn to our audience, as you saw a little teaser in the comments there. Few questions here for you guys watching at home. First one being, of those kind of newer options that we just kind of walked through, how many of them, if any at all, have you considered, and which ones? Well, I'd hope I hear a few Torpagos in there or something, but all right. Well, maybe it's looking like our audience might not be too well educated on what these options are and what's out there. So glad they're able to join us today, so we can hopefully enlighten you all. Well, here's a little bit more of a direct question about the state of your business. How do you feel about your working capital strategy and situation today? With everything that's happening in the economy, a lot of uncertainty ahead. What are you doing to prepare? Made this one multiple choice. Maybe you'll feel a little bit bolder in there.
I think please the comments coming. So we did this some time ago with another partner, Rusty, and I think the B was probably the most often quoted is we've talked about it, but we haven't yet done anything about it, and this was or too much about it, and this was back in the fall, last fall, where things were probably like everything is on the upswing still. We're feeling really good post COVID. Everything is going up. We're selling more. Everybody's happy. I think again, part of the reason we wanted to have this conversation today is we think this it's more important than ever to sort of have a plan.
Yeah, absolutely.
And I see a lot of these on the chat here.
Yeah, yeah, absolutely. I mean, with what's been going on, I think it's important to just have kind of a fail safe, right? As I kind of mentioned at the top of our conversation, really one of the main purposes of having working capital on hand is to be able to, manage your way through any kind of downturn or crisis. All right. So moving on to our last question here. When it comes to evaluating the many options out there, what are some of the main things that you're looking at as you make those decisions? I see some love for Brent Jackson in the chat. Love that. So just to kind of read this out for you, there's lots of factors that kind of go into this, right? How much is it going to cost me? How much am I going to get? When can I use it?
One of the item on this question, which I don't think we've talked about, is many of these alternative solutions and the bank loans and lines of credit require that you share information about your business, your financials, your business. In many cases, share access to your bank account, so the provider can have visibility into your cash balance, your incoming sales, your outgoing payments. Interesting. Something to think about is as you think about what you need and where you're going to go to find it. Think about how comfortable you are with sharing all that information. Right? Do you really want to give someone access to access to view your bank account? They won't take the money, but they'll view it. Is that something you're comfortable with? Right? Not everybody is comfortable with
that. Absolutely. Yeah. Bruno, I think you're going to cover this.
Yes. So we've talked about sort of accessing different sources, sort of taking it back to accessing what we think is working capital you may already have available, like receivables, get paid faster, maybe delay some, postpone some payments, leverage your sales. But the one where, again, part of that the discussion is and part of why we're in business is how can we enable businesses to tap into the commercial card program for more of their expense and working capital needs, right? How can we open up the use of that card so you as a business owner or finance person of the business can actually get access to that capital and credit for a short period of time, right? It's not long term, but it's something that can be very helpful.
And so I think another way to say that is, we've been talking a lot about getting your hands on this capital, finding the access, but the reality is most businesses have some kind of commercial card program in place. One of the biggest issues holding them back from really fully being able to utilize all that is, the fact that a lot of merchants and vendors really just don't accept card as a form of payment. So we're going to spend a few minutes here just talking a little bit more about, Torpedo and Plastiq and how we work together and how we can help you unlock that.
So the way we think of it is, again, unlocking that working capital that you have on your Torpedo card program, for example, and how that works. And if we can go to the next slide, we haven't explained how that works. It's actually pretty straightforward and simple. But think of, if you have a Torpedo card and you want to pay an invoice or a vendor that doesn't accept card, again, it's always related to the vendor doesn't accept cards. If they accept cards, you can use your Torpedo card today, which is great. If they don't accept card, you want to tap into your card, working capital and benefits. You say, I'm willing to pay a fee to do that. Plastiq is a solution where essentially you sign up for Plastiq account, username and password, email address and password, and you can start using your Torpedo card to pay those vendors. Plastiq is between your card and your vendor. You tell us, which vendor to pay. You tell us how you would like us to pay, via ACH, via wire, potentially via check. We do that, and your vendor gets paid within a few days. The card transaction goes onto your Torpedo card account, and you pay your card account at the end of the cycle as you do today, right? So you don't have to sort of do a lot of there's no approval process for Plastiq. There is no sort of need to provide financials to Plastiq. No, all you need to do is to set up an account and provide the information we need to make the payment. We charge a fee for that. For the Torpedo card, we charge a fee of 2.25%, 2.25%. We have all the merchant processing costs. And with Torpedo, again, you get that working capital, you get your Torpedo rewards, and you get to use that credit for that 30 days or so without having to get additional credit. And if the amount of credit or the time you need is 25, 30 days, that's a great solution. If you need 90 days, that's probably not the right solution for you. Yeah.
Right. And so, one thing we've been talking about a lot and that you started to touch on here is, the cost of acquiring access to this capital.
Yeah.
And the reality is if you're using Torpedo or, really any commercial card, you technically already have access to it. It's just a matter of fully unlocking it through sort of our collective service with Plastiq. So, we mentioned how, the traditional methods are rising in price. How does the cost of Torpedo and Plastiq kind of compare to, what some of the other options are out there?
And we'll get to that next slide, but I think there's one element when we were talking about, what are the factors or consideration of why would you use this solution versus that one is, the accessibility, availability, right? One of the key reasons people use Torpedo and Plastiq is they have the card, they have the credit already. And then, it's a good cost benefit comparison to other solutions. This slide shows the relative pricing. It's not exact. We have merchant cash advance and small business online loans on the left side. They tend to be a little bit more expensive. They tend to be readily available, but a little bit more expensive. They also tend to give you longer credit. So if you're looking for 120-day credit, they're a good solution for you. Now, we don't know, Plastiq and Torpedo do not do that together. If you have a bank line of credit or bank loan, that's a very attractive proposition as well. It's gone up a little bit because of the rates have gone up, and Torpedo and Plastiq together, between the fee you pay, the cash back of 1.25% you get, it costs you about 1% a month, right? Which is a very attractive cost compared to some of the other options. Again, if you need 30-day credit, that's a great option. If you need 90-day credit, probably not the best option for you. But that's how people look at it. No accessibility, price value, and lastly, also how easy it is to use. Right? It's I have it, I can use it. I don't have to provide more financial documentation. I don't have to apply for it. I don't have another thing to pay. I can pay the same Torpedo card statement every month.
Excellent. Well, we've only got a few minutes left. So, just to kind of go over the main takeaways, right? In the current environment, what we're saying here is that having access to that working capital is becoming increasingly important. You've got a lot of options. It's up to you to decide what's most important to you, and what's going to be the best fit for your needs.
Yeah. We had a couple of questions, right, that came through, I think.
Yep. Yeah. And so, right, we've got our contact info there. It'll be sent out after the presentation here. So if you're interested in learning more, feel free to get in touch directly. But yeah, I want to spend these last few minutes seeing any kind of questions that we can answer for the audience before we go. Bruno, I think we've got some more plastic specific questions there in the chat if you'd like to tune in on any of those.
Yep, I see it now. So how do international payments work? So it's with Plastiq, you can use your Torpedo card, US dollar card, to make international payments in US dollars or multiple currencies, depending upon how you want to pay the vendor. And the vendor, Plastiq pays the vendor by sending them an international wire. So they get paid receiving, in a electronic banking payment. That's how it works. So we make that happen. So you can use your card to send an international wire, for example. So all we need is the information on where to send the funds that you as a customer would provide to us. Right? So, and that's one of the unique thing about what we do is we can enable that. And many of our customers who are wholesalers or e-commerce sellers buy from international vendors. They'll use that facility.
Absolutely. Well, it looks like let's get to this one last question, then we'll sign off here.
Okay. Qualification criteria. There is no financial review. We don't do any. We don't do any of sort of underwriting, if you will, or credit. The only information we need is think of us as if you were to pay an online merchant. We need the information. We need the card information. We need the address, your address. These have to match. We do all the card, know your customer types, and then we need some information about who you're paying, which in some cases it's require an invoice, particular invoice on who you're paying, so we can make sure we send the funds to the right place. But those are all designed to two things: one, sort of protect you and your information, as well as to make sure that the payment is sent to the right place.
And for Torpedo, it's pretty straightforward, right? You fill out an application like you would any other credit card, non-personally guaranteed. So we're going to need a business bank account that's showing, steady cash flow from reliable sources. But with that, we've gone a minute over time. So, just wanted to say, Bruno, thank you for joining me today. Thanks so much to our audience. We will be sending out links with the recording, everything like that, as well as our contact info. So please get in touch if you have any more questions. But thanks again.
Thank you.